Welcome back. In the turmoil that has been going on over the past 6 or so months in specifically crypto markets, but more specifically the crypto related stocks like MicroStrategy, we are now finding out that along with a $1 billion plus cash reserve, that strategy is buying a new jet. In today's video, we're going to be exploring where we are in the cycle, what we need to prepare for 2026, and we're also going to discuss the crypto markets are faking it. This is the Cryptoviser podcast, and we talk about crypto, blockchain, and investing every single day of the year. Today, we're going to be talking specifically about Bitcoin, the Bitcoin-related companies, and more importantly, Cassandra. Now, we know Michael Burry has been talking about, effectively a lot of the AI market and the tech bubble he believes is going to burst. And if you look, his Twitter extension is Cassandra. So what exactly does Cassandra mean in finance? Well, Cassandra in finance can refer to an early warning model for financial crises or a metaphorical term for a person with an accurate but disbelieved financial prediction. This is the Cryptoviser podcast. Make sure you guys are subscribed to the channel. That way you never miss a new video. We upload every single day of the year to bring you the latest happening in the financial world. Do me a favor, also give the video a thumbs up, hit subscribe. Let's get into today's topics. Now, here's the deal. We're going to be talking about Cassandra. We're going to be talking about Bayesian trading, and we're going to be talking about a lot of what, the different things in the market are showing us. Because on this channel, we have been extremely accurate. Now, a lot of people don't like me saying that. They're like, Cryptoviser, don't say that you've been accurate. It's like, but I have been accurate, right? We have called the top of the market since the middle of 2025, since July. We've been coming down ever since. And this little jump that we've seen at the end of November, early December, everybody's getting, oh, you see, we're still in a bull market. Cryptoviser, you are so wrong. Look at what MicroStrategy is doing. Look at what all these other companies are doing. Meanwhile, the warning signals could still be there. Now, again, I am not saying that we are in a bear market. I'm not saying that we are going to be in a bear market. I'm not saying that I'm going to be correct forever. But our job in these markets is to analyze where the market is and where the market is most likely going, right? It's never a 100% prediction, but we've been fairly accurate. And that brings us to Jesse Olson, who's also been extremely accurate over the past 6 months on the market calls. He said, we've been watching Bitcoin go through a Wyckoff distribution for the past 54 plus days, and the price has completed a 96% of the pattern. Are we ready to retire the chart yet? Now, the Wyckoff distribution is this white chart, which shows phase 1, phase 2, phase 3, phase 4, and phase 5. And effectively, Jesse Olson has been calling this since October. You can see this post right here. And we've been following what Jesse has been saying on this channel effectively, I think since around October. And that really was the top, right? That was the euphoric top of the cycle based on the Wyckoff distribution, based off the Bitcoin halving tracker, and many other analyses that we've talked about. We're not going to get deep into all of these. You could just go back and watch my other videos on this channel and make sure you guys are subscribed. That way you don't miss these other videos. But effectively, the Wyckoff distribution pattern shows massive sell-off in phase 4 and 5. And that's where we are. Now, whether we're ready to retire the chart or not, whether we are done with the downtrend, personally, I don't think that we are. As you guys can see from previous cycles, this downtrend that we've experienced since October is fairly normal. And then we kind of stabilize out, but the trajectory is still down, right? The bulls, they want to say, oh, we're at the bottom of the market. Maybe a local bottom, but we're not at the macro bottom. And this is what this channel is about, the macro zoomed out view of where the markets are and where the markets are going. We sometimes trade outside of this channel day to day, week to week, month to month, but effectively this channel is about the macro, right? Because you can capitalize on the local bottoms if you believe that this is a local bottom and buy the dip, sell the rip, then wait for another dip, buy that dip, sell the rip. But at a macro level, it's a very risky opportunity and way more risky than where we were 2 years ago buying Bitcoin or crypto. Now, effectively, we are in a 1 year downtrend. And granted, the 1 year is based on previous cycles. This may change in my analysis. I'm not set in stone on this. And that's one of the things that we're really going to be harping on and talking about in this video, because although I've been a big MicroStrategy bear, maybe that's changing. but maybe it's not. And that brings us to Andy Edstrom, who is on X and is a market analyst. He wrote, "The Bitcoin price rise remains indistinguishable from a typical bear market rally." And I would agree. We've been talking about this in September, that there is a bull trap that will occur. I believe we're already in the bull trap, because the bulls, every little jump that we get, they're like, you see, we're still in a bull market. Everything's great. And it's like, we're still significantly under the all-time highs. And the inflows and interest and narrative around Bitcoin and crypto in general, right? Bitcoin in the longer term is going to be fine. But a lot of these altcoins, guys, I really don't think any of them are going to survive in the longer term. Maybe Ethereum, maybe Solana, like big maybe. But the rest of them, years and years and years have gone by, and they still do nothing. They still have no integrations, no massive adoption. All of the promises and narratives that have been pushed. Think about XRP, right? Oh, this is going to be the world reserve currency. It's not. It's going to be used by Swift. It's not. It's going to be used by the banks. It's not. Ripple's going to force usage of XRP with their RippleNet. They're not. I mean, all of these things effectively are failed narratives, right? Failed investment theses. And the people who are holding, they don't want to necessarily admit that. So they just continue to hold and continue to drive the same narrative that has been going on for years. And this is why I really do think that Wall Street getting involved in crypto was effectively the end of crypto, or at least the major crypto price rallies that we have seen. Because now what we're seeing is a push into stable coins, a push into banking coins. And all the Bitcoin maximalists are cheering this on, because that is the exit liquidity for them. And by the way, they have been taking the exit liquidity as it has been coming into the market. Another example of this bear market rally or local bottom potential is what this user, who we've also covered on this channel before, over 150,000 followers on X, said hodlers are blindly buying this stage 4 all the way down, trying to take shots at him and all the bears right now, that this is the best thing ever. Imagine picking the worst time ever in the cycle to compare being a hodler blindly dollar cost averaging into stage 4, into unrealized losses for 4 years, versus using solid risk management. And that's what this channel is about. Risk management. What is the highest potential reward with the lowest potential risk in these markets? John Bollinger, who in October, I believe it was, called a potential bottom or double bottom in Ethereum, even just recently admitted that his charting analysis is just a charting analysis. It's not a prediction of where the future is going to be. And sometimes these analyses fail. Now, he posted this chart on his X page, and we'll come back to the chart in a second. He said, it's a nice W, but I am not fond of the risk-reward setup. Now, in the W pattern effectively is a double bottom. You can kind of see that right here. This is the Bitcoin chart, and this is from July, right? So I called the top of the market in July, which effectively was the top of the market. We double topped, and then we hit one more higher high after that, but that was kind of the final rally before we started the downtrend. Now, again, if you're looking at the macro, we are nowhere near the bottom. Bottoms don't form over the course of 1 week or 1 month or 2 months, right? It forms over the course of time. And so this W pattern, it does, you can kind of see it here, right? But to me, this W pattern or double bottom pattern is not as clear as what we saw in August with Bitfarms. Now, if you remember, if you recall, go to youtube.com/the Cryptoviser, or just click on my logo down below and then click on the posts tab right here. And when you click onto the posts tab, you can scroll down and you'll see in August, I think it was August, right here. I posted this in August, and it says, this is the cleanest chart I've ever seen. And you can clearly see a very obvious double bottom pattern here. Let's go to the original post. And by the way, this was in September, I think it was, and this was MicroStrategy selling Nike Dunks to dunk on the bears. And meanwhile, that literally was the top of the market for MicroStrategy and Bitcoin. But anyway, back to the double bottom W pattern. Okay, where the hell is it? Right here. So in this chart, you can clearly see a double bottom pattern or the W pattern formation in Bitfarms. And Bitfarms, after this, completed an uptrend, completed the double bottom W pattern, how it normally goes if it is an actual double bottom W pattern. And that's what John Bollinger is claiming this is. Now, to me, it does look like somewhat of a W pattern, but it's not as clear as what we saw with Bitfarms or what we see with some other charts that we've reviewed on this channel. But again, John Bollinger is saying that he's not fond of the risk reward setup. And why? Well, the risk is so high because the macro, right? Think about the AI bubble, the tech bubble, the debt situation, the fact that people can't afford things, the government shutdown, all the effects of that, the unemployment, all the layoffs that are going on. The macro conditions are really, really bad. And so that, combined with the fact that we're at the end stages of the bull market, according to the Bitcoin halving tracker, according to Bitcoin's 4-year cycle, which, I mean, even, guys, the Bitcoin maximalists, okay, that believe that Bitcoin is a gift from God directly to their hands, right? They're saying code is law, code is this, code is that, Bitcoin is immutable and all that nonsense, right? Meanwhile, at the same time, they're taking money from Wall Street, selling their coins, and at the same time saying, oh no, the 4-year cycle is completely canceled. It's totally made up, even though it's literally coded in Bitcoin. Bitcoin halves approximately every 4 years. It's a little bit less than 4 years, but it's approximately 4 years. That is not changing, and that has not changed. And so the idea that the cycle is, which has been underperforming previous cycles, as every single one has, go watch my video called Bitcoin Diminishing Returns. And you'll learn a little bit more about how every cycle going forward, we're going to have less and less percentage gains in Bitcoin. But the maximalists will say, oh, no. We're not in a 4-year cycle anymore. We have an extended cycle. Same bullshit they said last cycle. And so John Bollinger, he understands the risk reward here. And again, you can take that risk, but what is the reward going to be? I mean, we're going from $90,000 to maybe $125,000 again. So a 20, 30% increase in the price. You want that, or you want 1,000% increase, 500% increase? Again, Bitcoin bottomed at 15,500 and topped at almost $30,000, right? A 9x, 900% increase. And the bulls are like, oh, Cryptoviser, you're wrong. We're going back to new all-time highs. We're going to hit $130,000, Cryptoviser. And it's like, okay, a 40% increase. That's what we're going to take the risk of potentially losing 40% for the reward of gaining 40%. This is not sound investing, in my view, right? In my view, that's not how we invest on this channel. But again, I want to make it really clear. I'm not telling you what to do. I'm just telling you what my analysis of the market is, right? And this analysis could change at any point in time. And that brings us to Peter Brandt. He says there have been 5 major bull market cycles in Bitcoin since inception. In all the previous cycles, the violation of the dominant parabolic advance has been followed by a 75% plus correction. No exceptions. You better have a great reason to bet against this pattern. Well, according to the Bitcoin maximalists themselves, the 4-year cycle is completely done and over with, right? On one hand, they say Bitcoin code is law, and on the other hand, they're like, oh, no, this cycle is very different. No, it's not. No, it's not. And remember, I told you guys, the beginning of November, I think it was the beginning of November, there was a crypto banter episode where Ran was talking with another YouTuber. And they were literally telling you what the market is going to do. And how do I know that they're telling you what the market's going to do? Because they basically said it. They're like, well, I hope there's one more pump in the market because I have a lot of things that I need to get out of, a lot of cryptos I need to exit. And I told you guys when I heard that, and they were both joking about it. I'm like, it's not a joke. They literally are trapped in their positions. So their idea is, well, let's make people think there's no more 4-year cycle. We'll get one more pump. We'll sell into that, exit liquidity. Well, if this is not the exit pump that they were looking for, they're not getting it, right? Because we've already broken through this quote unquote parabolic move, which effectively hasn't been parabolic compared to previous cycles. And so what is a 75% downtrend from $130,000? About $40,000, $30,000. And a lot of people don't think that we're heading down there, but I think that we are. And apparently, so does Peter Brandt, because he is looking at the charts. By the way, in November, there was $3.5 billion of outflow from the Bitcoin ETFs. $3.5 billion. Now, granted, this is a small portion of the overall Bitcoin ETF, market caps. But the trend is what we are looking at. And the trend is confirming what the thesis on this channel has been for the past 6 months or so, that the trend is lower. And it doesn't matter how many bounces we get, or if we go up higher, back above $100,000, maybe even above $110,000. The higher we go, the more we bet against it. Because here's the deal, guys. Like I just said with the crypto banter episode, they need to exit their positions, and they're going to exit their position. They know we're at the end of the cycle. This whole extended cycle nonsense is just to keep everybody excited, right? Oh yeah, we're not done with the bull market. We have a little bit more. We got to keep buying in the market. We got to keep dollar cost averaging because we're going higher. And that dollar cost averaging is the exit liquidity. MicroStrategy is the exit liquidity. That's the bottom line. And to many of my viewers, this stuff is so obvious, right? But there's a lot of people who don't understand this stuff. They just don't get it. And that brings us to MicroStrategy. Because what MicroStrategy is now trying to do is change the narrative on MicroStrategy, right? Because here's the deal. Bitcoin went down almost to MicroStrategy's buy price, which is about $75,000. If it goes lower than that, the market is going to be very, very fearful. And there's a very big potential of an extended sell-off due just to the fear, whether it's going, whatever the fear is that they can't pay, they're going to go liquidate, they're going to sell Bitcoin, whatever the issue is. Whether they do it or not, it doesn't matter. Just the fear alone could cause a massive sell-off. And so what we've been seeing now recently is this whole change in MicroStrategy. They're like, oh, well, we're going to have a $1.5 billion cash reserve. And by the way, they're also buying a new jet. What does a company that only buys Bitcoin need a private jet for? And by the way, the private jet, we don't know the actual purchase price of it, but from my understanding, recently they put down about $20 million as a deposit. Yeah, the initial deposit was listed as a mid-year quarter report and stated the company had paid $22 million as a deposit, as a down payment for this private jet. So the market is concerned about this company. The company has no real cash flow besides selling stock and debt and convertible shares on the open market, and a very small software business. And so they're like, oh, well, we'll just create a cash reserve. Oh, by the way, we're also going to buy a private jet. What do they need a private jet for? Like, explain that to me. What do they need a private jet for? I'm not saying they don't need a private jet, but I don't know what they would need it for. They just buy Bitcoin. They're going to go to the Coinbase headquarters and confirm that their crypto is in cold storage. Like, what do they need a private jet for? They don't, okay? But while they're doing let's buy a private jet, they're also now changing the tune to, for instance, Jesse Olsen says this is a new message. If sustained downtrend for a few years, then we'll have to sell Bitcoin versus never sell. This is the CEO of MicroStrategy. Keep in mind, Michael Saylor's not the CEO. He's the chairman of the board. But this is what their CEO recently said on Yahoo Finance. Let's listen in. And by the way, don't forget to give this video a free thumbs up and also hit that subscribe button. That way you never miss a new video. Let's listen in.
If there is literally a 3-year sustained Bitcoin down cycle, a 3-year sustained cycle where MNAV trades below 1x, then we may have to sell Bitcoin. At this point in time, it's the end of 2025. We're talking about 2029 where that may be the case. And we have the Bitcoin for a reason, to protect the company, to protect our shareholders. And if we have to sell, we...
So they went from we're never going to sell to, well, if we have to sell, we will sell. And again, you can see this on the screen right here. They have about 2 years, just under 2 years, month of dividend coverage for their convertible debt products or whatever they want to call them. But here's the deal, guys. Like this doesn't change the trajectory of Bitcoin. Okay, they are taking the exit liquidity the same way that the OGs that have had tens of thousands or hundreds of thousands of Bitcoin in their portfolios have been selling because Wall Street is buying. Michael Saylor is buying. And it also doesn't change the fact that they're selling their own shares and diluting their shareholders to keep buying more, right? And so Jason, a well-known tech, commentator, I guess you can call him, he said MicroStrategy gets more convoluted by the day. Now they're creating $1 billion reserve to backstop the payments due from the convertible debt that's backstopped by the Bitcoin in the public entity. Do I have that right, Grok? And remember, his rules. Does MicroStrategy break any? 1, if it's too good to be true, it isn't. 2, if you can't explain it to a 12-year-old, red flag. If they don't have an audit or can't explain the basic facts, red flag. And by the way, we still don't have proof of reserves for MicroStrategy. Keep that in mind, right? Why don't we have proof of reserves? I go back to Michael Saylor saying in an interview, I don't remember where the interview was, but we covered it on this channel, where he basically said, well, I don't really want the movement of the Bitcoin to be basically doxed. And it's like, well, why? Like, where are you buying the Bitcoin from? Where are you getting the Bitcoin from? Why does that bother you when people are asking for proof of reserves? And then 4, if they attack critics instead of answering their questions, red flag. And by the way, a lot of the MicroStrategy bulls do. They just attack. Like, you don't know what you're talking about, Jason. You're just a MicroStrategy bear, right? And we've been seeing this recently with the MicroStrategy bulls trying to say, and listen, I'm not a JP Morgan fan by any means, right? But they're trying to blame JP Morgan because JP Morgan put out a research piece that they believe that the MicroStrategy price is going to go down and that they're going to be removed from the stock index, MSCI. And being removed from a stock index could see billions of dollars of outflow. They're trying to say that this is a planned and coordinated attack to bring the MicroStrategy price down, instead of like addressing the points of what they're trying to. Here's the deal, guys. In my view, they're going to be removed from the index, right? Especially as we've been downtrending, especially as MicroStrategy price has come down. I mean, I think 50 or more percent just in the last 6 months or so. And they have no business. There's no business model. And a lot of these MicroStrategy bulls, they are in denial that we are headed under $100. I told my viewers back in July and in August and September that MicroStrategy would be at a minimum, or I should say at a maximum, $225. And that was when we were at almost $400. Now we're under $225. And I'm telling you guys, we're going to be under $100. How much under 100? I don't know. But that's where the trajectory is. Meanwhile, Mike Brock, this user said, this is the guy who created Cash App and worked under Jack Dorsey for years at Block and Square. And he critiqued Bitcoin directly. Let's listen to what he says here. So Mike Brock, who is formerly Cash App and now a reluctant Cassandra. And remember, a Cassandra in finance is a metaphorical term for a person with accurate but disbelieved financial predictions, right? Again, all of my predictions from the macro perspective about Bitcoin and MicroStrategy over the last 6 months has been pinpoint accurate, like so accurate. But a lot of the people in the market, right? My views compared to Crypto Banter's views is, I mean, a fraction of a fraction, because people don't want to hear the market's going down. They don't like that. They're like, Cryptoviser, you're just a bear. You're spreading FUD, Cryptoviser, and it's like, okay, whatever. We're making money on this channel. Other channels, they're just hoping for the next bull market, hoping for the next pump. It's like, how high did you buy in this market that you're waiting for another pump, right? And again, not every single call is accurate on this channel, but the macro is. And so these are disbelieved financial predictions. The MicroStrategy is going under $100. I mean, we're already down 50% in 6 months. And the bulls are like, nope, then we're at the bottom. We're at the bottom of the market. It's like nothing has changed fundamentally about how the business operates, right? Just because they have $1 billion reserve, nothing has changed. Anyway, Mike Brock said this. He said, Bitcoin holders that think the price is going to rip if we have a financial crisis or a sovereign debt crisis. In reality, Bitcoin is going to effing dump when that happens. The high priests of Bitcoin, in their religious fervor, have convinced themselves the opposite is true. But for those who still are reachable by reason, I send you this warning now. And I would agree, guys. The macro environment, right? The AI bubble, the tech bubble, the debt bubble, the the layoff situation, the fact that people can't afford basic necessities, and the inflation has continued to go higher regardless of what the headline inflation number is. The Federal Reserve for 4 years has been trying to bring the inflation down by just raising rates and keeping rates higher for longer, and it clearly hasn't worked. But they're not changing their thesis. And this is very dangerous, right? As an investor, to not be able to change the thesis. When we had the financial crisis back in 2020, when they shut down the global economy, Bitcoin dumped. And now people will say, well, Cryptoviser, that's because it was unforeseen. It was because they shut down the global economy. It's like, yeah, but that's the point. People thought Bitcoin was going to rip. And it took 6 months for Bitcoin to actually start ripping. And that was after the government printed $4 trillion and started to disperse the money. So this idea that, oh, we're going to go higher because the macro situation is worse. It's like, no. The first thing these people are going to dump is Bitcoin and crypto when they need money and cash. If GameStop is not doing well as a company, you think they're going to hold on to their Bitcoin even if they're in losses? The answer is no. But again, these maximalists, the hodlers, they ignore all of this actual data. And this brings us to Peter Brandt, another post from him. He said, I'm a Bayesian. Look it up and Google it. Well, okay, what is Bayesian? Well, Bayesian statistics is a particular approach to applying probability to statistical problems. It provides us with mathematical tools to update our beliefs about random events in light of seeing new data or evidence about those events. In particular, Bayesian inference interprets probability as a measure of believability or confidence that an individual may possess about an occurrence of a particular event. For instance, we are moving into a bear market, right? The probability of this is not 100%, and I never claim that it is. But the idea that we're heading into a bear market, the probability is very high, very, very high. And in the middle of the year, when I changed my thesis, because I was bullish, right? I was like, altcoin season's going to be coming. But then I looked at the charts and I'm like, no, we had altcoin season in 2023 into 2024 and doubled at the end of 2024, right? Many of these cryptos did extremely well. But that doesn't mean that people took profits. And so the people who didn't take profits are like, no, we're going to have one more pump. We're going to have one more pump. It's like, no, that was the last pump. And the other thing was we started to see all these Bitcoin treasury companies popping up in the middle of the year. We saw MicroStrategy adding all of these new debt facilities and other companies following them exactly. And I'm like, why are they doing this now? Why is Anthony Pompliano buying Bitcoin at $110,000 or higher when he could have bought a year ago or saved the money until we do have a major dip? But instead, everyone was euphoric in the markets. You may not have felt it, but that's what the markets were telling us. And so at that point, I had to change my viewpoint. And I changed very rapidly. And it's paid off. And it will continue to pay off as long as I'm able to continue to change my analyses based on the market conditions. He said, for any given market, for about 24 markets, I have binary narratives rolling around in my head. Truly binary, meaning it's going up or it's going down. Peter Brandt continues, saying, for example, I have a narrative for Bitcoin $200,000 and $30,000. I take both narratives seriously, but may not be willing to place the same amount of money on each of them. But my get size on each changes over time based on primarily on how the price behaves relative to the fundamentals that emerge. If bullish news produces price weakness, I add to the probability of the narrative for a price decline. What we're seeing here with MicroStrategy saying, oh, well, we're going to have a $1.5 billion reserve, right? The price immediately started to pump. But what is it pumping based on, right? In my view, we have to wait to see how this plays out because nothing really has fundamentally changed about MicroStrategy business or business operations or the debt load that they have or the fact that they don't really have cash flow besides selling things on the open market, which is very risky. And we've seen what happened with many of these other Bitcoin treasury companies already. Their stocks declined 97% and MicroStrategy is down 55%, but because it's the biggest one, maybe it's going to take a little bit longer of time, right? And so we have to keep an eye on the macro. Where is the trend? The trend is your friend. Peter Brand continues saying, there comes a point when as a Bayesian, I might give one narrative a 60 or 70% probability ranking. This is about as high as I ever go. And I don't want to immediately enter a trade when the 70% level is reached. Instead, I wait until I see an asymmetric risk reward point on the chart with a defined risk. By defined risk, he says he means some adverse price level that would be reached would move my Bayesian gearbox back into neutral. And when I place a bet, I never risk more than 0.8 of 1% of my capital pot, right? Less than 1% of his entire net worth or capital. The above explains how I think about markets and trading. I trade primarily on futures markets, selected ETFs, and Bitcoin. I monitor about 40 to 50 different markets, and I trade each maybe 3 times per year on average. Now, we're going to come back to this point in a second. I consider myself first and foremost to be a risk manager. I write about my process every week for members of my private community. Now, I would agree with what he's saying, right? As an investor, you're a risk manager. You need to know when to buy, you need to know when to sell, you need to know when to hold. Sometimes it's not right to do any of them, and you just don't do anything. You just get out, right? You don't buy, you don't sell, you don't stay neutral, you just don't do anything. But there's this idea that you're gonna miss it, right? You're gonna miss the bottom of the market if you don't buy immediately. You're gonna miss this pump if you don't buy immediately. But if you bought the pump in Bitcoin, right, would you be able to sell it? If you bought the local lows in MicroStrategy, would you be able to sell it if it doubled? Most people the answer is no, because they want more and more and more and more. And they don't see that the narrative is shifting. The cycle is shifting. And I'm not trying to convince you of anything. I really don't care what you do in your portfolio. You could lose 100%. I don't want that to happen for you guys, but it wouldn't matter to me. You could put your entire portfolio into MicroStrategy. Wouldn't matter to me. Right? I don't care what you do in your portfolio. I'm not trying to convince anybody of anything. I'm just sharing my analysis of the market. And whether I'm right or wrong, some of my positions I'm right, some of them I'm wrong. We talk about this on the channel, right? I talk about selling into losses sometimes selling into 90% losses just so I don't see it anymore, right? Because if I'm already down 90%, that means I have to 10x to get back to my buy price. And the likelihood that's going to happen in the short term is very unlikely. And again, listen to what Peter says here. He says, I monitor 50 markets and trade each maybe 3 times per year on average. So he's not day trading. He's making coordinated risk reward analyses and bets and just making a few a year. And even if just one of those does really well, it could offset all the losses that he made in the other ones that didn't do well. And this is why you want to look for these very high conviction plays. And going back to this Wick, his post is imagine picking the worst time ever in the cycle, which is the end of the bull cycle. Regardless if you think it's the end of the bull cycle or not, it's the end of the bull cycle, right? And being a holder blindly dollar cost averaging into unrealized losses for 4 years versus using solid risk management. And that's what this is about. It's about managing the risk. There have been times where I'm just like, I'm out. And I pull all of my positions out of the market, or some of them, or most of them. And there's some times where I go full in. There's sometimes when I see what MicroStrategy is doing, which is clearly trying to ease the market concerns, but it doesn't erase the market concerns. Because MicroStrategy has a lot of market concerns. So we went from the market concern being, can they pay the dividends, to why are they buying a private jet? Okay, We're going from they're buying a private jet to what if the Bitcoin price still goes down? We're still above a 1 MNAV. So these are all the things that we have to take into account when we're analyzing the market, analyzing our portfolio, and making those decisions. And hopefully all of us are making the right decisions. Hopefully you guys are. Hopefully you guys enjoyed today's video. Don't forget to give the video a thumbs up, hit the subscribe button, check out my other videos on this channel, and I'll see you on the next one. Thanks for watching.